Welcome to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank that brings you market views and insights on the go.
Welcome to Cut to the Chase. Today is Thursday, the 8th of June. I'm Daniel Lam, your host for the podcast. I want to change tracks a little bit in today's podcast and talk about gold, which is one of our overweight asset classes. So a frequent feedback from clients is that gold is trading near record high prices, which was $2,064 per ounce, last seen in August 2020. So that is true in nominal terms, but one may also analyze this through an inflation-adjusted lens. Looking at the long-term real gold price chart, the all-time high was in January 1970 at $1,120 per ounce. The current real gold price is 43% below its all-time high. Compared with the 2020 high in real terms, the current level is still 20% cheaper, and there have been 5 periods with higher real gold prices versus now. So after a strong March to early May this year, gold has retreated to the background as the quote-unquote sexier stories of US technology and Japanese equities took hold. Now gold dropped below the $2,000 level due to rising US real, i.e. net of inflation, interest rates, and the resolution of the US debt ceiling. However, we do not expect these headwinds to persist. A likely end to the Fed rate hiking cycle in the first half this year, followed by rate cuts in the fourth quarter this year, means that real yields and the US dollar would likely moderate. Furthermore, net positive inflow into gold ETFs are likely to continue as investors seek a hedge against macro and geopolitical uncertainties, especially given a structural underallocation to gold. Continued central bank and fiscal demand are the other key drivers behind our constructive view. So it is very important to remember that diversification is a key feature in any long-term or foundation allocation. Gold has lower correlation to other asset classes, making it an attractive portfolio diversifier. The cumulative returns for gold before, during, and following a recession over the past recessionary episodes are higher than other major asset classes. Finally, let's take a look at the technicals. The current zone around 1,950 to 2,000 is pretty dense. So we may see some narrow range trading in this area over the short term. 1,930 is the next big level of support for gold, followed by 1,885 and 1,810. Investors may gradually average in if gold pulls back to those levels. So that is all from me for today. As always, if you enjoy this podcast, please don't forget to rate and like it. Thanks for listening, and we wish you a happy day ahead.
Thank you for listening to Standard Chartered Money Insights, a podcast series by Standard Chartered Bank. For more details on the latest market insights, subscribe to Standard Chartered Money Insights.